Good morning and welcome to this Wednesday, October 30th edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats.com, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, there was some economic news out this morning. We're going to get into that in just a moment, but let's take a look first at what happened yesterday. Let's see. We're going to start off with the Dow Jones. Dow Jones down 19 points. So it was down just a little bit fractionally. S&P 500 down 2.5, taking a break after breaking out to an all-time high on Monday. Then we got the NASDAQ down 49 points. NASDAQ went right up against that resistance in July, pulled back. I think it's just a matter of time before we get this breakout. The S&P 600 small cap index trying to make a breakout of its own actually closed yesterday just above this 980 level, which it struggled with back in September. So really bullish action on the small caps. 10-year Treasury yield a little earlier you can see was up just a bit, 1.84%, but relatively flat. Healthcare continuing its tear to the upside. Big move yesterday to follow up with strength that we've seen earlier this week. Beautiful move above that 20-day. The 20-day now has crossed over the 50-day and rising. Really looks good here. Two of the big reasons yesterday, medical supplies. Look at the move here on medical supplies, up 1.91% on the session. So even though we had a fairly flat day and a down day on the NASDAQ, you can see that there were pockets of strength. Medical supplies had a great day. Healthcare providers also a great day. And you can see both these groups now trading above the 20, which has crossed above the 50. That's completely different than what we had seen over the past few months. So money is definitely rotating. We're seeing it move into some other areas. That's not a bad thing. We like to see wide participation. Technology, after breaking out to an all-time high, was the worst performer yesterday, but that's all right. I would say you got pretty good support coming in here at this rising 20-day moving average, which is just below 82, if it were to get down that low. One of the big reasons technology struggled yesterday, computer hardware took a break. It had been straight up in the month of October, mostly because of Apple leading the way. Apple will be reporting later, and as a result, this is going to be an interesting couple of days coming up. I think Apple is going to report great numbers, and I suspect that the computer hardware space will be doing very well. All right, I mentioned the economic reports. I'm going to move over here to the 10-year Treasury yield. This is a weekly chart, by the way. So I just wanted you to take a look at things from a longer-term perspective and kind of focus in on a test that we're getting right now at the 20-week EMA that we have not seen since all the way back in December of 2018 when we lost that 20-week moving average. We have not tested it. We are actually testing it this week. So pretty important. I mean, it's about 10, almost 11 months that we've seen the 10-year Treasury yield above its 20-week EMA. We have seen that this week. We'll see if we can get through. As far as economic reports go, ADP employment report out this morning, 125,000. That's what I'm showing as the estimate. Q3 GDP, everyone was expecting it to drop. The estimate was for 1.7%. Came in at 1.9%. And part of the beat was attributed to consumer spending, which remains strong. The FOMC announcement coming up 2 p.m. today. I expect we are going to get another rate cut. I think most of the market expects 25-point basis cut. I think we could get 50. I think 50 basis points is possible. I don't know, probably not too many share that opinion, but I believe that there's room for it, even though we did have a stronger GDP, and maybe that, who knows whether or not the Fed follows these reports that come up the last minute. I'm sure they probably had access to the data before it got reported today anyway. But there have been some weak economic reports out, retail sales, ISM manufacturing, just a couple of them. And so they've got room if they want to, and they certainly don't have a problem with inflation. And keep in mind, the Fed has two mandates. One is to promote economic growth. I mean, we want to make sure that we continue to see growth, but the other one is to stabilize prices. So you're looking at the economy on one hand, but you're looking at inflation on the other. My 50 basis point thought is really based more on the fact that inflation is so low that cutting 50 would actually weaken the dollar and prop up commodity prices. So I think they've got room to do that because of some of the economic weakness that we've seen. Whether or not we'll do it, and by the way, Bullard, one of the voting Fed presidents, did suggest 50 basis points at the last meeting. He was the only one, but he did think that 50 was more appropriate. Everybody now is getting in line with these rate cuts. It'll be interesting to see what happens at 2 o'clock. I do think you'll see a lot of movement back and forth, though. All right, we got a lot to go over, so I'm going to go through some of these earnings reports. First up is Amgen. Amgen came out with their earnings. I didn't see a market reaction here, but Amgen did beat on the top line, $5.74 billion versus $5.63. They beat on the bottom line, $3.66 versus $3.51. And looking at the, I'm going to just double check and see if Amgen has traded anything in pre-market. And at this point, if I can get to come up. Yeah, I'm still not seeing anything. The bid 208, ask 215. The stock closed at 209 yesterday. Pretty good numbers, though, beating top and bottom line. Close above 210 is really what we want to look for here. Next up, and I'm going to go through a couple of these others pretty quickly. SYK, they did barely beat on revenues, matched on the bottom line, $1.91 versus $1.91. Tried to make a move here heading into the close yesterday, did not make the breakout. And after hours or in pre-market action, we are down a few percent here. Let's see. Yeah, it was showing 3.41% a little bit earlier. AMD missed on their top line just barely, 1.8 billion versus 1.81 billion. Matched bottom line, 18 cents versus 18 cents. Stock was only down about 1.5% pre-market, though. I thought that was a pretty good reaction to a kind of so-so report. They did get upgraded. I will talk about that in just a bit, but AMD was upgraded this morning. A few chip stocks got upgraded. Electronic Arts, yay. Electronic Arts, 1.28 billion in revenue, market expecting 1.25. They beat on their bottom line, 96 cent versus 85 cent. They guided Q3 and fiscal year 20 EPS higher, and the stock is down after hours. I mean, sometimes I just kind of shake my head, don't quite understand why things work the way they work, but for whatever reason, Electronic Arts, the market not really liking that that move. I was going to try and just see get the latest here on Electronic Arts to see if they are still it's down 0.5%, down 41 cents to 94 bucks even. So it does not look like it is poised to break out, even though the report, from what I could see, was pretty darn strong. CHRW, this one's a little bit of a surprise, and I say surprise because truckers have been on fire. This one was right up against resistance. I thought for sure we would be seeing a breakout. They had a pretty bad miss on their top line and bottom line. And one thing I'll say is relative strength. If you're looking at the truckers, you say, well, truckers are great. I'm going to jump into CHRW. Well, this has been the worst or one of the worst performing truckers, down near a 52-week relative low heading into earnings. So while the market may be liking truckers, they really didn't like CHRW. The stock is now down 7.2% pre-market action. This is one of those things where if I'd looked at this, I would have said, no way do I want to hold this stock into earnings. For some reason, Wall Street doesn't like CHRW. Today, we get the news. Next up, EXAS. This is Exact Sciences. They beat top line, beat bottom line, stock down 6% after hours. And again, look at the last 2 months, straight down in terms of relative strength. I don't know what's going on, but the market didn't like the report. The technicals have looked weak, and they're going to continue to look weak after today's reaction. Molina Healthcare, MOH, has started to strengthen here a little bit. Molina beat on the top line, beat on the bottom line, but is down 5%. So we're probably going to come down here and challenge this 20-day, 50-day moving average and these recent lows. If you're in the stock or looking to get in the stock, I definitely would want to see a hollow candle. I want to see a gap down and a recovery. I do not want to see it moving back down below those moving averages. And when we look down here at the relative weakness again, last several months, stock has not been strong. So even though it's coming out with good numbers, traders still, for whatever reason, not impressed. Zendesk in the software space. Software just, kind of hard to put your arms around. A lot of the weakness going on. I mean, we saw Microsoft break out, and they're heavily weighted in the software index. So we don't really see in software right here what's been going on under the surface. There are a lot of stocks like Zendesk that have been breaking down, been doing it on big volume. They beat top line. They doubled their bottom line, 12 cents versus 6. Stock is up 4% after hours. So it's going to gap back up, it appears, above the 20-day moving average where it has been struggling. If it fails to hold it and comes back down, I think I'd be really careful with the stock. Next up, GE came out this morning. And GE, not a bad report, actually, for GE. I have to always qualify it for GE because this has not been a very good stock for a long time. But stock's been going sideways. It had shown a little bit of relative. Well, the group had been showing strength, and GE showed a little bit of relative strength here over the last 2.5 months. They beat on the top line, beat on the bottom line. I believe the stock is up after hours or in pre-market trade. Let me see if I can get that one up here for you. Yeah, it's up 9%, 83 cents. Now 86 cents, 9.90. So if we go back up here, 9.90. So it's going to gap up above all of this. Next big level is going to be up around that 10.75 area. All right, next up. CME Group. CME Group had a pretty nice report here. And take a look at that chart. They did beat on their top line, 1.28 billion versus 1.27. They beat on their bottom line, $1.90 versus $1.75. That's a pretty good beat. And the stock is up a couple bucks in pre-market, 203. But it also has to get through the 20-day. And I'd really like to see it hold this recent support area here, right around 200. Definitely want to hold this double bottom, which is around 192. Next up, LHX. Pretty good report out of L3 Harris Technologies. They did beat on their bottom line, 258 versus 239. The stock is showing up 2.5% pre-market. So the stock does look like it's trying to get back up through the 20. We'll see if we can get through the 50. Best case scenario here is this is sideways consolidation where we return back up to that 215 area. You can see we got down here to about 197, then came down to 195, held that 197 on a close. So we could be moving back up toward that 215 area. Breakout above 215 would be bullish there. GRMN, Garmin. I wrote about this stock last week in the EarningsBeats Digest. For those of you who receive that, it is a free newsletter. I'd strongly encourage you to get it if you don't already get it. You can go to EarningsBeats.com and sign up. It'll be on the main page there. I really liked Garmin going in. First of all, recreational products were breaking out. The stock had pulled back, but notice the pullback in relative strength occurred after we'd had the big move up, tested major overhead resistance. Stock wasn't going down. It was just simply consolidating after what appears to me to be up move, a long, elongated cup here, maybe a handle. I was looking for a big move here. I said in the digest, and I'll show you this, right here, EB Digest. If you go in here, for members, you can go back and take a look. This was last Wednesday. So last Wednesday, using a top-down approach, I talked about the fact that recreational products had been quite strong, breaking out, and you can see that right here. And so Garmin is a part of that. And the stock had been solidly outperforming the S&P. The group had been on fire. So I simply said that I thought the stock looked very strong and would report solid numbers. Garmin, $934.4 million in revenue. The market expecting $869. Completely blew it out of the water. $1.27 versus 94 cents on the bottom line. Again, completely blowing it out of the water. Numbers aren't even close. Raised guidance and the stock up 7% pre-market. $94.20. It is up $6.29. So if we go back over here, you can see 94 is going to be way above this. We got a big breakout on Garmin, and that was one of the strongest earnings reports I have seen this quarter so far. Garmin absolutely crushed the numbers. Let's see, a couple of others. I'm going to give you a few others that really look strong to me. OSPN, this is OneSpan. Now, the stock overall wouldn't have shown it. I mean, sometimes you get these reports that come out and they're change in character. Market doesn't see it coming. Maybe the management didn't share it. I don't know what the reasons are, but I know when I see a company come out with great numbers and a huge reaction to the upside, that gets my attention. It normally will go onto my strong earnings chart list. OneSpan up 20% pre-market, 1905, all the way up here, taking out that prior gap resistance. This is a huge move up today. The stock, I mean, if you look at it, some days doesn't trade a whole lot of volume. That might be a little bit of an issue, but the numbers were great. 79.7 million versus 63 million. 36 cents versus 15 cents on the bottom line. That was huge. Keep that one on your radar. IPHI, semiconductor. Another one that just absolutely blew numbers out. 94.2 million versus 90.1. 45 cents versus 37 cents. Guided their quarter four revenues higher, and pre-market stock up 12%, $7.05. Currently at 66.50, which would clear all of this overhead resistance. Look at that nice little hammer that printed yesterday. Looked like we were breaking down heading into the earnings report. And magically, we get this recovery into the close, and then boom, $7 to the upside. Big report there. TENB, this is Tenable Holdings. And you see the stock downtrending here. Really looks horrible on a relative basis. I certainly would not have owned this going into earnings. But big beat on the top line. They had a loss on the bottom line, 7 cents, but the market was looking for 11-cent loss. So actually a beat. They guided their quarter four earnings per share higher. And looking at the stock pre-market, it is up 17.4%, 26.30. So all the way back up here. Looks to me like it's probably breaking this overall downtrend. Managed to hold on to that December low back there. That was all good news. Another one. Now, this one was kind of surprising to me, the reaction. ENPH, this is a stock that very familiar to EarningsBeats members. Stock was on fire for a couple of quarters, really hit the skids. I think just consolidating. Looked like it was making a run into earnings yesterday. They came out, they beat top line, 180 million versus 176. Beat bottom line, 30 cents versus 25 cents. Guided their quarter four revenues higher. So you're thinking, okay, this is going to be a big jump to the upside. Yeah, not so fast. ENPH still consolidating. It's actually gapping down 12.67% today, back to $22. I wouldn't be surprised to see a big red hollow candle here, though. If it opens above, say, 21.5, right now it's at 21.99, I would expect we're going to have a nice little rally. We'll see. Let's see. There may have been, I got to keep moving here. Crocs had a good report. They're up 6.5% pre-market. Wingstop also up about 4% pre-market with a big beat top and bottom line. All right, let's keep moving. Got a couple of upgrades, downgrades. I'm just going to show you these real quick. AMD already talked about. They were upgraded. ADI, this is Analog Devices, upgraded. Let's see if we can break this downtrend here. Relative strength has not been good here, so I'm not a big fan of this upgrade. Microchip, looking at this one needs to hold on to this relative support. It did get upgraded. If it can get a breakout, it could resume some leadership here. I'd be watching for a close over 100. Downgrades, CHRW, I talked about that one earlier, the trucker that was down 7%. GLW, Corning, stock got downgraded. Bearish engulfing candle right at this resistance area. I don't know. I think this one's got some work to do. It has started to strengthen on a relative basis. If it can overcome this downgrade, hold on to the 20-day and break out above 31, maybe we're getting a change here. JWN, this is Nordstrom's. Been on a big move to the upside, but it did get downgraded today. This is one that I would probably be interested in on a downgrade. Stock down about 3% to $36. 20-day moving average is at 35.30, and it looks to me like we had a change in character back in August. So I like this one, but we got to move on here. All right, I'm going to go into a segment I like to call Break It Down, where we take a look at some interesting industry groups. And I'll tell you what, these two, these two groups, I want to talk about them for a while. I'm going to skip through the 3 charts you must see today, simply because I think we got a lot of really good information and a lot of good charts to look at right here. So what I'm going to do is I'm going to start with the commercial vehicles and trucks. I wrote a blog this morning, talked a little bit about 2 groups, teased a little bit because I wanted to spend some time talking about these areas. But commercial vehicles and trucks, first thing I want you to do is look at their relative strength or their seasonality over the last 20 years. So when you come in here, you type in seasonality up under this sharp chart, you can click on seasonality, type in the symbol. Let me just show you how you do this if you're not familiar with it. So when you type that symbol in, then it'll give you 5 years down here as the default. Take this on the left side, click and drag, and you can take this over 20 years. Look at November. That just stands out. That's like some kind of Mount Everest or something. 90% of the time, commercial vehicles and trucks have been higher, have ended November higher than it started. And its average gain, 5.7%, which is easily the best month of the year for commercial vehicles and trucks. I mention this because we're on the verge of a breakout, and we're also on the verge of November. So if we get the breakout, just keep in mind that from November, actually starting in October, and that's when the strength has begun here, October, November, and December. I'm gonna show you one other thing here. You can compare this to the S&P 500. Again, it'll be a 5-year. Drag this out 20 years. Here is your outperformance of commercial vehicles versus the S&P 500. Starting in November, 4.6%. December, 2.1, so that's 6.7. Down 0.5% in January, 6.2, then 7.9, 8.6, 11.1. The next 6 months, commercial vehicles and trucks averages outperforming the S&P 500 by 11%. Seasonality tells us we need to be looking at this group. Also, the charts are telling us we need to be looking at this group. Look at the October move here and the breakout above these prior highs. I'm going to stretch this out a little. Let's go back a few years. I'll go back. Actually, let's go back 5 years, and I'll do a weekly chart. And when you look at this, back in 2016, 2017, this is when our economy was strengthening. GDP was solid. Then we got into a lot of issues, trade war, blah, 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 blah. But back when things were rolling, this was a group that was on fire. And when we pull it up relative to the S&P 500 over the same 5-year period, look at what happened in 2016, 2017. This group was a leader. So we're starting to see this strength here. We know that the next 6 months it tends to outperform. This is a group I think we need to pay attention to. So let's take a look at, I'm going to pull up the first chart, PCAR. They reported back on October 22nd. Look at the big volume and the breakout above this prior resistance. PACCAR is one you want to be thinking about. Nice breakout, great volume, overbought, but these stocks will pull back. Keep this on your radar. Caterpillar. Now, they came up short, but when they came up short, the stock went up anyway. That, again, I'm not going to trade it because it's not going to be on my strong earnings chart list because they've missed earnings. But if you're just looking for stocks to trade, Caterpillar is showing great technicals right now, breaking out big volume. And again, let's take a look at this on a relative chart. Here is the area, the long-term area of breakout around 141, 142. The group is breaking out. And all of a sudden in the last month, you can see Caterpillar beginning to show a lot of relative strength. Next up, CMI. They reported yesterday, 388 versus 383. The stock came down. I said yesterday, or I think it was yesterday, on Trading Places Live over at Stock Charts, that I expected it would have a red hollow candle, or at least I thought that it was very possible that it would have a red hollow candle and bounce back. And that's exactly what happened. The stock gapped down after earnings. A lot of good news built in, buy on rumor, sell on news, but then the buyers came right back in. I think the stock's going higher. OSK reported earlier today, 217 versus $1.88. Let me see if I can get you a pre-market quote on OSK. It just shows an ask of 86.20. The stock closed at 84.39. but a breakout would be an open. If we get an open above 85.88, 85.88. If it opens above 85.88, I think it's going to continue to roll to the upside. Could always use that 20-day moving average as a possible second entry in case it pulls back. Certainly could use it for a stop loss, any close below that level, but that is something to think about. All right, let's see, what else do we have? How about TTC? They don't report again until December 5th. Let's pull this one up. This is Toro. They reported back on August 22nd, 83 cents versus 73 cents. So there was your gap up. Came back down. Look at that false breakdown. I mean, so many games played on Wall Street. But it was a good report. Got the gap up, and eventually look at what's going on now. Got a big breakout yesterday. ALSN, this company, Allison Transmission, has reported really big earnings beats the last 6 quarters. It doesn't always mean they last. You can see this one back in April, big gap up, then went down for several weeks. But they have beaten by a wide margin. Maybe the market just expects it now. But they're looking for $1.12. They report tomorrow. We could see a breakout here. Relative strength has not been the best. That I would not own it going into earnings for that reason, but I wouldn't be surprised given the overall market if we do get that push to the upside. A couple of smaller stocks, if you like the small stocks. H&E Equipment Services. Look at this breakout. Look at the volume coming in. Sideways consolidation for months. Look at the relative strength breaking out to a new 52-week high. Small caps are on a roll. You got commercial vehicles and trucks on a roll, and here is a small cap commercial vehicle and truck company. Big volume breaking out. I think the stock looks good. FSS, this is Federal Signal. Another one breaking out, another small cap company, another one that's got really nice relative strength. Took a huge move up on big volume back in July on that earnings report, but it continues to push higher, even though overall we just recently saw this breakout in the group. I think FSS looks good. All right, let's turn our attention to another group. And the first thing I'm going to do, I'll look at seasonality as well, but let's take a look at machinery, industrial machinery. 2016, 2017, we were on fire in this group. While we've been consolidating, it hasn't been doing much. All of a sudden, coming back to life. Got the relative PPO, not quite above the center line, but getting there. Let's watch to see if this continues, but I do like the action here in the industrial machinery space. Let's take a look at the seasonality here. And then I'll go through a couple of individual stocks for you on this one as well. Okay, there is your 5 year, yeah, and there's your 20-year. October, November, pretty strong, followed up by some strong months to come. Again, this period through April tends to be very strong for industrial machinery. And if we compare it to the S&P 500, add them up, 0.6, 3.2, 3.8, 4.6, 7.2, 7.3, 8.9, almost 9 percentage points above the S&P 500 on average the last 20 years from October through April. So this is a good group. Just showed you the relative chart, which was strengthening. Let's take a look at some individual stocks in this space. Illinois Tool Works, ITW, came in with a big earnings beats. I really like this chart. Sideways consolidation, big breakout. Look at the relative strength. ITW 204 versus $1.94 in their last quarter. That was just reported I think it was the end of last week, maybe on Friday. PH, which is Parker Hannifin. Look at this one breaking out to new highs. Industrial machinery, you can see they're breaking out. Another one, relative strength looks good. They report tomorrow. So this is one that I would think probably will have a good report. I mean, if they're expecting $2.65. PNR reported on October 23rd, 58 cents versus 55. So even the beaten down ones are starting to get a little bit of a lift. That's a good sign as well. Dover has beaten 6 straight quarters. They reported on October 17th, $1.60 versus $1.51. You can see the breakout on big volume. Stocks continuing to move higher. Another good relative winner there. And well, that's probably about it. We're running out of time here, but you get the drift. Been a great time for these stocks. I think they're going to continue. Want to thank all of you for joining me today. Remember to join in every Monday and Wednesday here on Trading Places Live. Have a great day, everybody. Happy trading.